Earlier today, I got a phone call from Shane. He asked me why I didn't tell him that he could beat the banks by paying $1 extra to his loan a day. I said, what? So Shane continued. He said he'd seen a video online that said by paying just an extra $1 a day on his mortgage, he could hack the banking system and cut his home loan term from 20 years to a mere 5. I wasn't sure what to say. It just sounded too crazy to be true. So I had to look into it. And this is a claim of a viral TikTok video. We're going to separate the facts from the fiction and help Shane and you guys work out if this is too good to be true. So according to this video, banks want you to pay interest monthly because they rely on something called compound interest. The video suggests that paying $1 to the bank every day will mean you pay a big fat zero in interest. The claims in that video get even crazier. They suggest that mortgage is a Latin word and Latin was phased out of the education system to keep us in the dark about the banking system. All sounds a bit like a conspiracy theory, and that's because it is. In this video, we're here to debunk this theory and shed some light on the actual workings of compound interest and the reality of mortgage repayments. So let's dive in and separate the facts from the fiction. Let's talk about compound interest, the secret sauce that makes your bank account grow over time or your debt balloon if you're not careful. Simply put, compound interest is interest on interest. Let me give you an example. Say you put $1,000 into a savings account that offers a 10% interest rate. After the first year, the balance would be $1,100. Your initial $1,000 plus $100 in interest. But this is where the magic of compounding interest kicks in. In the second year, you don't just earn interest on the initial $1,000, you earn on the whole $1,100. So at the end of the second year, you'll have $1,210. The third year, you're looking at $1,331. That is the power of compound interest. Now, what if you're on the borrowing side of the equation? The mechanics of compound interest work in the same way, just not so much in your favor. If you borrow $1,000 at a 10% annual interest rate and make no repayments, the same compounding effect happens. After 1 year, you owe $1,100. 2 years, you're in the hole for $1,200. 3 years, you're looking at $1,331 in debt. That's compounding interest for you, a powerful tool when you're saving, but a necessary evil if you're looking at borrowing. Now that we understand compounding interest, let's move to the real question. Can you really pay zero interest by just paying an extra $1 a day? We've covered that compound interest can be your best friend when you're saving, but your worst enemy when borrowing. How can you beat compounding interest when you're dealing with a mortgage? The simple answer is to pay off your loan as quickly as you can. Let's consider a similar scenario to the one suggested in the viral TikTok video. This is based on a 20-year loan term with a home loan worth $500,000 and an interest rate of 5%. Now keeping in mind, most home loans are on a 30-year term to start with in Australia. Based on a 20-year loan term, it makes your monthly repayment around $3,300 or approximately $39,600 per year. Over the 2 decades, your original loan of $500,000 will end up costing you $792,000. Of which a whopping $291,950 is just interest. In the second year, you don't just earn interest on the initial $1,000, you earn on the whole $1,100. But here is where the magic happens. What if instead of making monthly payments of $3,300, you decide to pay $1,650 every 2 weeks? At first glance, it just looks like the same amount. But here's the kicker. There are 26 fortnights in a year, not 24. By splitting your repayment every 2 weeks, you end up paying $42,900 a year instead of the minimum $39,600. By simply restructuring your payments, if you can afford to do it, you'll end up repaying your loan in just 17.5 years instead of the default 20-year term. Plus, you end up paying around $41,000 less in interest over the life of the loan. Unfortunately, that's the honest way of how to get ahead of your compound interest. It's not paying an extra $1 a day, it's about strategically planning your loan repayment. And now that we've covered that, let's dig into why the $1 a day claim falls apart and the realities of mortgage repayment. Let's tackle the idea at the heart of this viral TikTok video: paying daily. The fact is, making the minimum monthly repayment more frequently, be it weekly or daily, won't make a dent in your compounding interest unless you're paying more. So put another way, if you broke up your monthly repayment of $3,300 and paid it daily, paid $110 a day over a 30-day month, it's not going to make a massive impact or a big dent into your interest over the life of the loan. But let's go back to that scenario. And what if you add an extra $1 a day to your minimum repayment? By adding $1 a day to your payment, you'd shave off around 3 months from the 20-year loan term. You'd save $5,470 in interest, which isn't nothing, but it's a far cry from paying your loan off over 5 years. To pay off your loan in 5 years, as the viral video claims, you'd have to pay an extra $201 per day, which is around $113,000 per year, not $39,600. The truth is, there's no secret hack to dodge compounding interest, but there are strategies to help you pay off the loan quicker, like looking to refinance if your rate becomes uncompetitive, or even utilizing the benefits of an offset account. The best way to minimize compounding interest is to pay off your loan as quickly as possible, making extra repayment. A word of warning there though, if you have a fixed rate, there can be some restrictions in the amount you can overpay per year. Generally, with banks in Australia, the maximum you can make in extra payments if your whole loan is fixed is $10,000. That's where a mortgage broker like us can help and look at the pros and cons of fixed and variable and see what's going to help. If on the other hand you have a variable loan, you are able to make unlimited extra payments and help you get ahead and pay off that loan way quicker. If you want to see the benefits of making extra payments, check out the loan calculator on our website. I'll include a link below. Unfortunately, there are no shortcuts to financial success. Making wise decisions and small tweaks like making extra payments can help you get ahead on your loan. At Hunter Galloway, we're mortgage brokers. We can help home buyers and homeowners all across Australia with their loans. There's no cost for our services. We get paid by the bank, so we'd love to help you out. If you want to see some strategies to help pay off your loan quicker, hit us up at huntergalloway.com.au. We'd love to help you out. Until next time, see you guys.